Good morning. It is Friday, April 2nd, 2021. Thanks for being here. Today is a day that always reminds me of a story about Charlie Merrill. Everybody knows who Charlie Merrill was. And one day back in the 40s, Charlie was walking down the street and somebody yelled out and said, "Hey, Charlie, what's the market going to do today?" And Charlie waved back and he said, "It's going to fluctuate." And that was obviously the only forecast he could give. And today's the day where I can tell you I know exactly where the market's going to go today. It's going to go nowhere because it's closed. This is the one day of the year, regular business day, where the stock market's closed, and there's a lot of theories, and we'll go into that in just a second. So we're glad you joined us here, and we're going to take about 12, 13 minutes of your time, and then everybody have a great Easter weekend. So Mallory, let's go to the first slide if we could, please. Here we go. We are market close on Good Friday. Why? Well, when I got into this business, it was a quarter of a century ago, started doing some research. Why are we closed on Good Friday? And there's a lot of myths out there. One of them was that the stock market had opened on a Good Friday and then there was a terrible crash, and that was wrong. That didn't happen. The other second was kind of like that. They said there was a gold crash on a Good Friday with the market open, and that actually did happen, but it didn't happen until September of 1869, a couple years later. There were a couple of years where the market was open on a Friday, but 1906, 1907, it went up both days. And then in 1989, it was open on Good Friday and went down, but only went down 0.5%, which is almost nothing. So the myths are all kind of around it. What it comes down to is that it's probably more based on Judeo-Christian tenets that we were all founded on. And it happens to coincide Easter, Passover, all those typically come about the same time. Easter is basically a national holiday, a federal holiday. So on Good Friday, the market decided they were going to honor Easter by taking off Good Friday. A couple of other exchanges close today in the global economy. One is Canada, and then you'll see other closers on Monday. So quite a few European countries close on Monday out of honor for Easter. So generally, we're going to be slow for the next couple of calendar days, and then through probably Tuesday morning, we'll be back to all the markets being open again. Until then, it's going to be kind of quiet probably. Bank is open today. We are closed for the market. So let's talk about the first quarter performance, which ended this past Thursday. Dow Jones in 2021, we were up 7.8%. The same time last year, we were down 23%. And you've got to remember right here at the end of March of last year, we were right at the bottom of that COVID valley we saw. And then 2019, let's go back one more year, we were up 11% for that first quarter in the Dow. The NASDAQ, remember that's our tech heavy, is up 2.8% in 2021 to this year. Last year, it was down 14.2%. And then in 2019, for the first quarter, it was up 16.5%. And then the S&P 500, which actually is a benchmark that I prefer, it's a little more broad market. It's got quite a few companies in it. It's got a lot of industrials. It's got a nice cross section of sectors. It's up 5.8%. I like that number a lot. Let's assume that we do that every quarter, take 5.8 times 4. Is that what we're looking for? That's optimistic, but it's still a pretty good number. The S&P 500 was down 20% for the first quarter of 20, and in 2019 it was up 13%. So if you look at that 2021 column, it's not as good as 2019. It's not as bad as 2020, and that's splitting the difference. And I kind of like where we are considering what we went through last year and where we are as far as treasuries are concerned and things like that. So not bad news at all. This is our Dow Jones Average. Look at the far right. We are still fighting up. We're still setting records, which is just a wonderful thing to see. The really good part about today is we're going into April, obviously. And over the last 50 years, 48 of those years, April has been the second biggest performer of the year. So calendar-wise, this is a nice place to be for April. We've got a lot of room up here. This is really cool to see. And there isn't too much negative on this at all. We see all those little valleys, we see those bumps, but overall we just keep trucking onward, and this is a good thing to see. So our moving averages continue to go up, our daily average sneaking up, and this is all pretty good news. So the treasury yields, this is the part we've talked about. That spread started to take off. I'm still not happy that 2 years are down where they are, but you can't complain about a 10-year that's approaching 1.7%. Obviously, we'd like to see that about 2.5 or 3%. We'd actually like to see it quite a bit higher. It's going to be years where we see that, but the spread is good news, and that 1.7% on the 10-year is actually indicative of what we can see for the future for the economy. That tends to lend itself that the coming economy has room for growth. So that's what we see. That's what history tells us, and we'll have to see if that weighs itself out. But right now, that's good news on the Treasury yields. So the unemployment claims, those are still kind of struggling. We went up again this week, and we're still down around 700, up around 700,000. We're still fighting to get the moving average down. It's just being a little bit stubborn, and we're going to have to see how that goes. We had a nice decline last week, but this week we crept back up again and added quite a few. On the other side, we probably should talk a little bit about new jobs created, and those are going up, but there's still around 120,000 new jobs created, which is good. It's not great. So we'll just have to keep taking this slow, slow, slow. I've talked about this before. That's like getting an F and all A's, and eventually we're fighting it back down. But we're still around 720, 750,000 new unemployment claims, and let's hope that kind of goes away as the weather gets better. This is our volatility index. The impressive part about that is yesterday we hit a low. We're just doing wonderful on that. I like to see that. As much as anything, this is an emotional bellwether of how people are doing. So you can see that I've talked before, it looks kind of like a heartbeat. So I kind of expected to jump up a little bit. It's not doing that. We just went into another low, 17.3. We're at a 52-week low. I'd like to see that around 10, and it looks like it's trying to do it for me. So we'll keep an eye on that, but this is good news. You see the volatility index drop, you can see some stability, and that's nice to see, and that may be indicative of what we're going to see this summer. So the next chart is the US sectors. Now remember, we've talked about the problem with the year-to-date, or the problem with the 52-week thing, which is that middle column, is those are so elevated because we're now looking at the lowest part of COVID going back 52 weeks. So those numbers are just, they're odd to look at. What we want to pay attention to is the 2020 year-to-date, and you can see those numbers. Oil and gas, that's down 16.5%, but oil went above $60 yesterday. I think ideally we want oil to be at 80. I know OPEC would like it to be at $100 a barrel. I don't think we're going to see that for a bit. I do think we're in for high per gallon gas prices going into Memorial Day and probably Independence Day. We'll kind of see how the market bears that out. That's going to be a whole lot of supply and demand, and see what Americans want to do, but we'll have to see how that goes. So those three sectors, telecom, utilities, and oil and gas, are down for the year. Everybody else is, those are just solid numbers for the first quarter of the year, which are really cool. That actually should say 2021 year to date. That's my mistake, not Mallory's. Next, the world markets, they were kind of quiet this week. You have I got these after everybody closed last night. So for the week, you can see that everybody was up a little bit. The UK is still kind of being a laggard, and I've warned before, I'm a little concerned about things going on there. The one thing that we want to tie into that, next to the UK, you've got France, which just locked down again until April 30th. They've closed schools again because of COVID through the end of April. The UK has got a little bit of recession threat, and year to date, they're down 10.7%. We'll have to keep an eye and see how that goes, but that is starting to trend where I warned about the first part of the year, which is a potential recession issue. I'm kind of hoping the weather helps them out. We'll see where that goes. And at the bottom, you have the three US indices, which are all doing just really, really well. 16.2 on the Dow. NASDAQ is doing well. So we're all okay here in this area, and still good numbers. So strengths, weaknesses, opportunities, and threats. I want to talk about that. Visit that first of the month. The strengths are we are adding jobs. The interest rates are low and probably will remain that way, with the exception of 10-year Treasury, which we really want to rise. And the weather turning good, that is a positive indicator for us. Opportunities are lower interest rates, great opportunities for people doing mortgages right now. A little bit of a struggle for the banks not being able to make what they typically can make on doing mortgages, but for the general economy, it's pretty good. The weaknesses, our first-time unemployment claims are still pretty high. I'd like to see that come down some. And the threats, housing prices, we've seen some recent estimates on housing, and they're just really taking off. And I don't know if those numbers are sustainable, but house price going up 48% in the last 48 months is pretty incredible. COVID, I'm going to go to that in a second. It's still a bit of a threat. And I think we've kind of gotten to the point where we're almost immune to hearing about it, but we do need to talk about it in just a second. So those are the areas right now that I see as SWOT. So let's talk about COVID. We have 43 countries with no restrictions. We have 50 countries that still remain closed out of 220. That's a pretty high number. 5 countries are due to reopen pretty quick here. And the countries that are partially open are 122. 32 of those still have mandatory screening on arrival. So these are still really big numbers. We've got roughly what I calculated is about 70% of the countries have some kind of restrictions or are closed. And that's a big percentage. Admittedly, a lot of those countries they're in Asia, they're in Indonesia, but a lot of this world is still being affected by COVID, and it could be a long-term issue. There are some threats about new viruses going around. We still have some issues with, do we wear a mask? Do we not wear a mask? When do we wear it? And so there was an article early this morning I read that they're concerned about the number of cases rising again. So my concern is that we turn our back and we forget about it. But as far as a worldwide issue is concerned, this is still kind of an issue, and I don't really want to lose track of it. It could have some effect on us. Next, Mallory. So this is our calendar going forward. I do want to touch on something. We got the big boat out of the way, so Suez Canal is now reopened, and we'll wait for another fun event. The FOMC minutes are going to be released next week, and we'll take some time to go over those before we talk next week. April 12th, International Day of Space Human Flight. That's a pretty fun day for me. The GDP quarterly numbers are going to come out April 29th. Those are important because that'll tell us whether we are or are not officially in a recession. I think those numbers are going to be positive, and I think we'll like what we see. We have Mother's Day coming up May 9th. We don't want to ever forget that. And then again, Mallory and I will be taking a break. It looks like it's probably going to be mid-June to mid-July, and we'll keep you informed on how we're going for there. Mallory and I are here every Friday. We really enjoy this time. She's in the control center about 12 miles away, produces and edits for me. And then any questions, please send them to us, and we'd be happy to answer them for you. We are here all day today, 913-259-2110, or you can email us any questions you might have, but we're happy to help you. This is free, no commercials, no politics. Tell your friends we're here, and we'll enjoy having them join us. We really like looking up and seeing all these names of folks that join us every week, and a new name once in a while, and some states from far away, which is extremely fun. So Mallory, thanks so much for being there. Thanks everybody for joining us. Have a great Easter weekend and enjoy the weather. Take care.